Welcome to Emily, that she wants to spend an hour with us here to answer all of our questions about Acast and make us a bit smarter on how the company works. And welcome to everyone who is participating here. We would have it in English today because Emily is better in English than Danish. So I hope that everyone will be able to follow along here in English. I have written down a lot of different questions, but let's give the word to Emily to begin with and have her present something about the Acast to start off with, and then afterwards we will continue with the Q&A. So Emily, thank you for wanting to spending some time with us here. Your Danish investors in Acast. The word is yours.
Thank you so much, and it's so wonderful to finally meet you. I have seen you come into the cap table, and I have wondered and followed this story. So when Anders reached out, and I had a look at his take on us and our shared view on the future and the opportunity and the potential. Of course, I'm so excited to be here. All right, so I have promised that I will spend a short amount of time on the basics of Acast and our position, and then we'll open up for Q&A. All right, and you can always follow us as well separately on our investor channel, of course, and press releases. Okay, can everyone see this?
Yes, it works.
Brilliant. And please do, I can't see the screen now, but please stop me if I'm going too fast or if I'm not making sense. My Danish is not the best, but I can make an effort. So if you want to ask a question in Danish or English or the French also works well, then feel free to do so. All right, I shall start. So wonderful to be here. Thank you, Anders, for the invite. Of course, delighted to spend some time with you all. I came into Acast some 3 years ago, and prior to joining Acast, I'd spent 12 years in financial services, in risk and insurance, working for a global FTSE 250 company with a big balance sheet and big international operations. I spend most of my time internationally in Asia Pacific, in London, and in Sweden. But I came across to Acast to help the company grow and mature its finance processes and to be able to access different sources of capital, including the public markets. And that is what I've done since I came on board. I absolutely love this company. I'm an avid podcast listener. I will be in the high end of weekly consumption, probably clock at 12 to 15 episodes easily any week. So that's where I'm at. Our CEO, Ross, is based in London. He couldn't make it today. He is at the UK podcast show, hanging out with some of our competitors and wonderful creators who I'm sure we'll get on to later on. Okay, so in terms of Acast basics, what we are here to do is really to help podcasters find their valuable audience and make money, regardless of where people are listening. We can monetize podcasts. And when we do that and we help podcasters make money, we make money as well. We have most of our revenues coming from advertising, more than 90%, and we split those revenues with our wonderful creators. And our objective is to become the largest marketplace for podcast monetization globally. And we've been pursuing this objective since 2014. We're headquartered and founded out of Stockholm. And we have our Chief Innovation Officer, Johan Billgren, who's still a founder, who's with us today. But right now, as at the last quarter, we reached 47,000 shows connected to our platform, which distribute 1.2 billion listens per quarter. Anders, I'm relying on you to let people in if needed. Stop me otherwise.
Yeah, I will do that.
Wonderful, thank you. So that's of course the supply side. The podcast creators create the content on which we can serve ads and where we can attach subscription models to those listens and those shows as well. So on the demand side, we have our advertisers. We work with several thousand advertisers each year, all of the big media agencies, but also brands direct. And recently we've opened up for our listeners to access the marketplace by subscribing to individual podcasts. And we had a great acceleration actually of reach in Q1 and going from 73 million unique listeners in Q4 to 91 million monthly uniques in Q1 2022. And we're getting close to that magic number, 100 million monthly uniques, and some of those big advertisers and media agencies, particularly in the US, start to pay attention. So watch out for that milestone coming up. Now I'll spend 1 minute on the very basics, and that is that podcasting, where the vast majority of podcast listening happens on what we call the open ecosystem for podcasting. And it's a bit like the internet. You know, if you access a web page, you can access that from any different web browsers. Any different web browser. And with podcasting, you can listen to Acast and other podcasts through any of the 250 odd listening apps out there. So that is what we call the open ecosystem for podcasting. And we want to make sure that podcast creators get as big an audience as possible so that they can monetize their show to the full potential. And that is why we distribute and monetize on all of these through all of these different channels. But the end listening app do not get a share in the revenue. They get free engagement. So people stay on their app. And the wonderful thing here is, of course, that when listening grows on all of these apps, Acast benefits, because if you're listening to a podcast hosted by Acast and you hear an ad, it's actually us working secretly in the background, delivering that ad behind the scenes, and we are sharing that revenue with the podcast creator. So a few slides on our market position. And starting with some of the wonderful fundamentals that were very strong in our Q1 results. And they underpin the fact that consumption of podcasts is growing. More people are discovering podcasts. And when you discover podcasts, it's quite common to go from listening to one show a week to listening to 4 or 5 or maybe 6. So once you get the podcast bug, you sort of tend to go back for more. So we grew our podcast to 47,000 shows. That's plus 7,000 shows in the first quarter, the fastest growth we've ever seen. And we grew the number of listens that came through our platform by 44% compared to the same quarter last year, and reached 1.2 billion listens in Q1. So it's clear that more and more creators are coming to us, and they're coming to us with good quality content because people are consuming their content and listening to it. Of course, in terms of the market, we all know that there is a big target addressable market for podcasting. One can define this TAM in different ways, but here's one way of defining it, and that is looking at the existing podcasting spend, which is between 1.4 and $2 billion right now, and what's currently being spent in radio advertising, like for like. Now, we're not saying that all of the radio money will go over to podcasting, but some of it will. And since this study on the right-hand side was published by PwC in connection with our IPO last year, we've only seen increased estimates for growth in podcast advertising. So the latest revision that PwC did a couple of weeks ago was to project 47% growth in podcast advertising in the near term. And Acast, within this podcast advertising space, has a track record of hyper growth. You can see our history. These are our quarterly revenues right from the start in Q4 of 2014, where we were setting out in Sweden, expanding into the UK, Norway. We've put flags in Australia, New Zealand, Ireland, Canada, France, Germany, Mexico, and we have an international team as well, and recently headed into Spain, but more on expansion later on. And we've really taken a significant market share in our core European markets, and we're growing at pace everywhere we play, particularly in North America. And as you look at these markets over here, everyone is growing. Markets are growing either single digit, double digit, triple digit, or quadruple digit. Of course, those are the smaller markets growing at extreme pace, but it's wonderful to see that everyone is growing. In Q1, we did see growth accelerate in North America. That's a big focus area for us. US, Canada, and Mexico are within those North American figures. But we did see a measured approach from our European advertisers who were more affected by general market sentiment, inflation fears, and the war in Ukraine, and so forth. And you can see that come through in our growth pace in Europe, which was 35% compared to North America at 107%. And of course, other markets, that's mainly Australia, New Zealand at 47%. The bottom half of the slide, you can see the local profitability in these markets, and we're leaning into our investment in North America, and it's paying off in terms of growth, which we are happy with. Of course, in addition to those local profits, for example, in Europe, we have made investments in our amazing tech team that continue to help us scale and build the product that is fueling our growth. And with this market position that we have achieved, we are dominating right now in Sweden and UK charts when it comes to consumption and popular podcasts. So 50% of the top 10 pod index in Sweden hosted and monetized by Acast, and we dominate in the Apple podcast chart in the UK as well. And the US is interesting because it's a very fragmented market, but we have still managed to come in. We're sort of neck and neck with iHeartMedia in terms of the number 1 or 2 spot. Right now, we're at number 2 when it comes to reach in the US. So we reach just short of 22 million monthly unique listeners in the US. This chart here is from Podtrack. Granted that it doesn't have Spotify or Audio Boom figures in there, and the US market is very fragmented, but it still shows that whilst the US market is fragmented and we have a smaller market share in the US than what we have in Sweden and the UK, we're still holding a very good position in a growing market. And with the tech and the platform that we've built, that's something that we are capitalizing on for the future. One exciting thing with podcasting is that it's still a very under-monetized media. So if you look at the ad load, so how much of your consumption time in podcasting is dedicated to ads, it's 5%. If you compare to radio, TV, YouTube, YouTube can be 25% of your time spent on ads. You can see that there's still so much upside in monetizing podcasting effectively. And from our perspective, we are very excited about that because we can then continue to improve our revenue per listen. So how effectively we monetize each listen that comes into the platform. We measure that by average revenue per listen each quarter. And you can see here in Q1 22, we had a beautiful jump in listens. So we reached over 1.2 billion listens Q1, and our degree of monetization of each listen was 0.24 SEKs. There's some seasonality in Q1. It always comes down from from the prior quarter, where Q4 is strongest when it comes to advertiser spend, but it has increased over time, and it can continue to increase as we see advertiser dollars coming into the fold. In general, what we are working on, of course, right now is that we're not only working on more effectively monetizing our listens, we're also working to illustrate and really show to the markets that we can scale this business in a sustainable and solid way. Q1, we had a wonderful net sales growth of 51%, but that was boosted by FX, and we had 40% organic growth. We had a healthy 36% margin, and overall as a business, we reached negative 23% EBITDA margin. And clearly we're working and this was an investment-heavy quarter where we saw some headwinds in advertiser spend in Europe. So clearly we're on a mission to illustrate. We're very comfortable within the business, but we're continuing to illustrate to the markets that we can scale this business in a proper way. So that is what we're working on right now, of course. So I hope that was helpful, and I'll be delighted to hand over to Anders to pepper me with difficult questions.
Perfect. Thank you, Emily. Very good presentation. And for everyone here, you are mostly welcome to type in questions if you have anything from this presentation or everything else that you may be thinking about when discussing Acast. I have taken all the questions that have been sent to me, and let's go through them. I've divided them, so maybe let's start with some on the product side. We could see that Spotify, for example, they're beginning to add video and also some kind of CTA links when they do advertising. Is that something that Acast is working on getting into as well, or do you think that is going to disturb the experience of podcasting?
We have, in order to provide those links in the app or have, attach banner ads and click-through CTA technology, you need that end user experience. We do have the ability to incorporate media pictures and videos into the podcasting experience. But what we find is that most people actually put their podcast back in their pocket once they start listening. So it's actually not the medium that you consume with your eyes. People specifically consume it so that you can do other things, exercise, commute, or cook dinner for your family. So it's very rare that you actually have that screen in front of you as you're consuming the media. So that is not something that we're pursuing with greater detail at this point in time.
No, that makes perfect sense, because my thought was also that I never listened to a podcast and watched the screen, so it wouldn't make so much sense for me to have a CTA on the screen, because I would never see it. So yeah, it makes sense. As you mentioned, the ad load at the moment is quite low in podcasting. Is that something that you think it will go up to, let's say, 20% or 25% in the future? Or do you think that having a low ad load could also be a way to compete with other kind of medias, because it's more interesting to listen to a podcast when there's only 5% ads and not 20% ads?
Oh, definitely. We have to balance the ad load and the impact. But we have been working with this media for a long time, and we understand and are working with our creators to coach them through our product and to our outreach as to how to place markers. We've got technology that find great spaces in a podcast where you might have a natural break, where you could place an ad, or we find contextual relevance for car ads being placed next to conversations around cars, for example. That's one specific way of targeting. But it is really important that ads are placed in a good way. We're not big believers in some podcasters, particularly in the US, will have a very heavy ad load, sometimes up to 5+ minutes of a block of host-read ads at the start. We don't believe that's a great listener experience, and it also increases the likelihood of the listener skipping those ads. So we want to make sure that we have effective monetization for the podcaster and the advertiser to have a reasonable ad load. Having said that, from an Acast perspective, we have been able to build our marketplace with the listens coming first. So we are sitting on a wonderful gold mine of unsold inventory. We've just been very successful at attracting podcasters, and our model and our way of working really resonates, and we can see that accelerating in Q1 as well. So for us, it's about selling the inventory that we have, being effective with selling the unsold ad slots that are available. And what we've seen in the markets where we've been the longest, so Sweden and UK, for example, where we have educated and worked with the advertiser market, and they come back, we're really part of any sizable marketing plan, and people come back and respend and give us bigger tickets for bigger campaigns. We're growing into selling our inventory in a more effective way, and we have seen prices go up in those areas, and we have seen some tweaks to the ad load. For example, in certain very popular verticals around November, when the demand for advertising is very high ahead of Black Friday, ahead of the holiday season. So when we see that additional demand, we can unlock inventory through ad load for a specific time, and then we can revert that and go back to a more normalized setting. And that's worked very well for our podcasters and for the advertisers. But you're right, we can't. I don't think we will go to 25% like YouTube, but
No.
will it be more than 5? Absolutely.
Yeah. Okay. Perfect. I can also see that in the last in the Q1 presentation, you discussed your new conversational targeting. Is that something you already using? Do you have got any feedback, or can you see results being better when using the conversational targeting?
Yeah, conversational targeting is really exciting because it is completely disconnecting the targeting from any personal data points. So it's completely privacy proof. It's not relying on any personal data points. It's purely based on the conversation that's going on, the context. So this is more how Google approach advertising, people searching for a certain topic and then placing ads within that context. And we call that conversational targeting. And we've had tests, and we've run campaigns on conversational targeting. So when Samsung comes and they want to test $1 million on being in every single conversation in podcasting around the globe, around mobile phones, we can provide that type of targeting because all of the podcasts that go through our platform are converted from audio to text. And we can then apply natural language processing and our artificial intelligence to that text to understand whether podcast hosts are speaking positively about Samsung phones, for example, and then we can place an ad in that context. So yes, we have tried it out, but we're building the capability, and we're really excited about this next phase of rollout. And it's a perfectly privacy safe type of advertising, and it's really exciting times.
Do you have any competitors in that space, or are you the only one providing a conversational targeting method?
None of the pure play podcasting companies do it, and we're definitely at the forefront. We've been working with this for testing it out for over a year, and we're working with the advertisers to get them familiarized with the concept. But we're definitely ahead of the curve. But there will be a couple other niche players out there who do it.
Yeah. Okay. And then if we look at the Acast Plus, you begin to deliver that to different podcasters and around the globe, as I understand it. How has it been adopted so far by podcasters?
Yeah, Acast Plus is really exciting. So we've launched it now so that all podcasters who have a show with Acast can use it. It's a scalable product. It's available everywhere. The product is not available in every single language, but you can use it in English, for example. So it's really exciting times, and we've used this case before. It is an edge case, but it's one of our most successful Acast Plus cases, where we have one of Ireland's biggest shows, Tommy, Hector and Loretta. They use Acast Plus in a very effective way. So they produce bonus content and they offer ad-free episodes to their fans, and they are gaining great traction. They've really found the formula of how to convert their audience. So they're converting over 5.5% of their listeners to a subscription model. Typically, what we see is that if you offer only ad-free, so you're not adding any extra content, you might convert 1% or 1.5% of your audience. But if you add like an insight or a nugget or bonus content, that takes a little bit of effort, but you see that conversion increase. So then you can convert between 2 and for that example, more than 5% of your audience. And that starts to be really, really good money for the podcaster. So it creates a really sticky product. It's great for the podcaster. It's great for us. We take that net, so it goes to the gross margin, and the other part of the payment goes direct to the podcaster. So for, I think, Tommy, Hector and Loretta, it's not quite 50-50 that they earn from ads and subscriptions, but it's a great proposition. And we're seeing that more and more big podcasters are coming in. You might have seen our announcement yesterday that Mark Maron is coming to Acast. We're, of course, extremely excited about that. He's a top 25 show in the US and an icon in this world. And he's really excited about getting Acast Plus up and running, and providing access to his amazing back catalog of interviews through that product. So he's really excited about being able to do that across different listening platforms for his fans. So that's the type of use case. But we're seeing more and more both big shows and smaller ones come in to use this as a scalable product that really helps them add monetization opportunities.
And
so we're really excited.
Yeah, sorry.
No, but it will take a little bit of time before we can see this come through in the numbers. Yeah. We did 1 billion of revenues, billion SEKs of revenues last year, and we're starting from a small base with Acast Plus. It will take some time before we get to see an impact in the numbers.
Do you have any idea what the average price is for the Acast Plus subscription for a listener?
Yeah, it's between $3 and $4 per month. So let's say you release once a week and you offer ad-free at $3. That's a bit less than $1 per ad-free listen. So it's very high revenue per listen in that scenario, even though we're just taking the 15% cut for us. But even with that metric applied, it helps us monetize effectively as well. So it helps increase our average revenue per listen when we get podcasters to use Acast Plus, because you only convert one portion of your audience. So it's not sort of impairing the ability to serve ads. If you're converting to 2.5% of your audience, you still have that beautiful 97.5 to work with your ads model. So it's a really great compliment.
Yeah, makes very good sense. At the moment, are you serving every podcast on your platform? Is it no matter the size? Is it possible to get advertising on that platform, or do you have to have like a minimum number of listeners before you can become interesting for an advertiser?
Technically, it's possible to serve ads on very small shows, but right now our marketplace has been opt-in. But clearly, as we work with increasing, for example, our programmatic advertiser offering, and now let's be clear, it's not programmatic as in open bidding real time. It's still an invite-only programmatic marketplace where you can buy ads to be served across different portfolios. So theoretically, you can serve ads on very small shows in the market. And I quite often listen to obscure US shows that have very few listeners in Sweden. But if they're hosted with Acast, I will typically hear a great local Swedish ad that is well targeted for me. And that is our technology running those ads, for example, for women in Stockholm or a Swedish audience. So absolutely, there's not a listening benchmark, but it's opt-in, and we want to make sure that our marketplace is brand safe as well, so that the content that is on the platform meets the needs and brand safety requirements of our advertisers.
Yeah. Okay. And then if we fix it over, then as an advertiser, is there a minimum amount that I have to invest to start advertising on your platform, or is it for every kind of budget?
We will open up for smaller budgets in the future. We do have a way to, we've started a self-serve market or a self-serve channel for smaller advertisers that you can test out on our website. But that is a front end, and we have not fully connected and built the product to buy automatically from if you're a small advertiser. So right now we will not take every single budget as we work with our sales team to push those tickets through. But what's exciting with the technology that is to come is that we will be able to automate more of that sales channel and make it easier for smaller buyers to access the inventory. And this is very relevant in the US. If we get to bulk up a little bit more, reach even more people in the US, we can start to unlock some of those hyper local radio budgets in the US. There's a lot of money being spent there, but you need some reach and scale to really have enough listeners in the outskirts of Utah to be relevant for the advertisers that have historically advertised on the local radio station.
Yeah, that makes good sense. So if we think about the company in the future, then average revenue per listener can be can rise when you get a lower minimum on the advertising spend, but also be able to serve smaller podcasts in that way.
Absolutely. Yeah. It's all technology enabled, and so what we need for that to occur is we need to continue to grow our platform, continue to get more bulk up in terms of listeners, reaching more people, making sure that we have great consumption on the shows that we attract, so that we attract quality content. That's relevant to advertisers. And let's not forget, they get access to these hyper engaged audiences. And what's interesting and what's a great opportunity for those mid-size or smaller podcasts is that if you're spending one advertiser dollar with a smaller podcast, you get a higher ROI because those listeners are so loyal and so in tune and so engaged with the content that they will listen to those messages from the advertisers with even greater attention. So there's a great opportunity there in that middle. We call it the heart of the podcasting industry. Those shows that are not necessarily known to everyone, but offer great opportunities for advertisers to get into that hyper engaged audience.
Yeah. I could also see that you have made some partnership with, for example, Podcastle and Lalo. How does that work? Do they pay you in such a partnership? Do you pay them, or is it like a collaboration where no one get paid in the partnership, or how does it work?
Yeah, typically when we announce those types of partnerships, it's a collaboration and strategic partnerships where we have where we get value and have a mutual exchange. So I'm not going to go into commercial details, but with Podcastle, for example, it's really exciting to see that we keep building the tools for podcasters that will help fuel our growth and attracting podcasters in the future as well. Historically, we've had some amazing podcasters who have, they've built their own business around the podcast. But the typical podcaster right now is not a full-time podcaster. They might be a journalist, or they've written a book, or they're an educator, or they're on TikTok or YouTube. They have different channels, and they're used to creation being easy. So as the TikTokers and the YouTubers come over, they don't have time to spend on building a podcasting business from scratch. And that is why we're trying to make it easier and easier for them to engage with us, whilst we're also building a great monetization machine in the background. But I think that's an important thing to note about podcasters. They're not actually podcasters. They do so many different things, and they have multiple revenue streams and ways to engage with and monetize their audience. Merch is a massive source of income for many. And podcasting needs to be open. That's also why we want podcasting to be on the open internet, so that the audience opportunity is the biggest possible. We don't want to hamper the podcasters' ability to grow their audience, because that hampers their ability to monetize their audience in different ways.
Yeah, makes very good sense. You got 7,000 new shows in Q1, and that was both smaller shows and bigger shows. Why are podcasters choosing to work with Acast over other competitors?
I mean, there's not one silver bullet or one answer, but we're getting better and better at getting our name out there. We're becoming a bigger name in the US. And one thing that we have done in sort of the last 6 months, this is a tool that we didn't really have until Q4 of last year, and that is that we didn't make a big song and dance about it, but we relaunched a new website during last fall. And the website that we have now has the tech, the tools, and the ability to really act as a proper funnel for attracting podcasts, and for us to be able to measure our success in a data-driven way, depending on our growth and marketing efforts. And we have a wonderful team working on show acquisition from a product-led perspective. So they work with growth marketing, and they assess the ROI and the lifetime value and the cost of acquisition for the podcasters that are coming in. And what I'm most excited about, and their efforts are coming through, we've also signed some wonderful big shows as well through our creator network, who look after those bigger podcasts like Mark Maron and Peter Crouch and Anna Faris. So we've had successes on all fronts, but it is really exciting to see that product-led approach in terms of getting that growth machine up and running. And they're learning new things every day, and they're keeping at it.
Yeah, perfect. Yeah, so you just announced that you're going into Spain. You also announced that there would be another market on the way. Do you have any specific countries that you're looking at more than others? Is there other areas that are more interested at the moment?
Yes, and it's actually out there now. We have just launched in Singapore. It's a small launch. We have a wonderful new starter called Timmy, and she is extremely experienced in the Singaporean markets. We announced that it was a smaller announcement that went out on LinkedIn and our blog. We haven't put it on the wires, but that is actually the new market where we're planting a flag, and it's really exciting to be working with Timmy on that market. It's really exciting times. So yes, Singapore.
Why Singapore? Is there some kind of specifics around why you chose to go into Singapore at the moment?
Yeah, Singapore is a good hub for us. We can look at Timmy's worked internationally across Asia previously, but what's great in Singapore, I guess it's a bit similar to India, is that we can piggyback, and Hong Kong, we can piggyback off the great content that we already have, particularly our English-speaking content. So the BBC, The Economist, the FT, those heavy-hitting business and finance publishers that we work with have a great following in Singapore. So our job now is to build a local catalog to match those international listenership with local content to continue to grow that business. But we have an international team that has already seen spend come from Singaporean advertisers. So we've already tested that market and seen that we can gain momentum. So we're not just doing an analytical approach when we go into a market. We're actively testing and speaking with the local markets and testing advertiser appetite to this medium. So that's how we went about both Spain and Singapore. Spain was a digital launch, so we launched Acast Plus and all of our products in a digital way. But we haven't gone boots on the ground there just yet. But we did in Singapore. So there you go.
Yeah, perfect. So after Singapore, is it then the plan to move into more of Asia, or is that not a focus for you?
I mean, we continue to, right now, we have to walk and chew gum at the same time. We have fantastic growth in some areas of the business, and then we have a little bit of advertiser, they're taking a measured approach in Europe, which we saw in Q1. So we're testing the market, and we're keeping our ears close to the ground. That's what our international team is there to do. And so we need to, pace the timing of how we enter a market as well, so that we get the best return on our investment as we go in. But we're not doing heavy investments into new markets. We're going in quite light. And what we're seeing is that it's becoming quicker and quicker for us to reach local break even in the markets where we're choosing to play. It used to take longer, but we've been able to shorten that time period, both from having better tech, more products, a better approach to expansion, and just nailing that formula for expansion.
Mm. And then if we look at let's take US maybe for an example, what is the main strategy for you for gaining market share as a percentage of listens in the US? Is that new big shows? Is it growing existing shows on the platform? How do you think about that?
It's three elements. It's, of course, we do attract some of those big shows, Anna Faris, Mark Maron, for example. But we are not in the business of buying the top list of podcasts like some of our competitors have put up big tickets. We don't buy IP. We want the podcaster to own their own craft. So we do not buy IP or buy access to exclusive podcasts to listen behind a paywall, for example. We want those podcasts to have the biggest audience. But we love it when we get the opportunity to work with fantastic big shows, because they attract other shows and it creates a positive flywheel and helps our brand in the US. So we will continue to add some of those larger shows, but it's not every day that you come across such a giant like Mark. So it might take a while before we have that type of opportunity again. But we're also seeing, that influx of smaller shows or mid-sized shows who are great for advertisers and provide great reach, incremental reach as we add them to our platform. And then what we're also seeing is that consumption on all of the podcasts that we have, not all, but as a net, consumption is increasing listenership overall for podcasts. So if we look at Q1, for example, we grew from just short of 1.1 billion SEKs in Q4 to just short of 1.3 billion SEKs in Q1. And that came from both acquiring larger shows onto the platform, acquiring those mid and smaller shows to the platform through our growth team. We did have a small boost of listening coming from increased news consumption, which is linked to the war in the Ukraine and the turbulence in the macro environment. So we've seen news consumption tick up, but that was a small contributor. And the biggest contributor in the quarter was consumption increasing overall on the existing catalog. Okay. But everything is contributed, so all channels are working.
Yeah, perfect. And who would you say is your three main competitors at the moment, if you look at specific markets or take like an overall view of the biggest markets?
So it's a good question, because typically competition is local. There are a few internationals, very few businesses who are pure play podcasting, you only do podcasting. But in terms of pure play podcasting, we have Libsyn and Audioboom. Libsyn has been focused more on the hosting side, so they've been more of a SaaS business, but they've added some advertising capabilities in the last couple of years. And then we have Audioboom, which has been focused on the sales side, but they have not invested in technology in the same way that we have. They're also not international. Libsyn is focused in the US, and Audioboom is also largely a US business, even though it's listed in the UK. So those are the two pure play players. In the US, you saw that, I'll share it again, the top list of content providers into the US ecosystem are listed here. So clearly iHeart is a big player, and they're not only podcasting, they're doing media, a lot of radio money in there as well. So they're a different type of beast. And then NPR, they produce, of course, Wondery. They sit with Amazon, New York Times. They sell their own content actually, and you've got some other big publishers there. So iHeart, I guess, would be the obvious one to note in the US when it comes to having both technology platform and advertising capability and working with creators.
Yeah. Okay. Perfect. And then I could see that Spotify and Amazon has been interested in podcast area for quite a while, and Spotify also made a few acquisitions for not that long ago. Do you see them as getting bigger and bigger competitors, or do you think that they're another kind of player in the podcast industry?
Oh, it's really interesting. I mean, we do compete with them on certain levels, but they have so many different types of business models in the way that they have structured their podcasting. They've bought different assets that have different strategies. They have Anchor as a long tail, the sort of beginners platform. We don't lose shows to Anchor. They only come over to us. They have Megaphone that is operating in certain markets. We will come up against Megaphone sometimes in conversations with creators. And they have, of course, bought IP when it comes to Gimlet, for example, and other assets. So they have, I think they've played all types of different strategies, and it'll be interesting to see how it pans out. We've invested so far around $25 million in our technology since 2014. They've spent about $1 billion on more on acquiring podcasting assets, and we're very happy the way that we have navigated the market where we're in. We have a stable and solid 36% gross margin in the competitive landscape that we have, our green friends had a negative 1.5% gross margin on all of their entire ads business in Q1 as they're taking those podcast investments through their cost of sales. So I think, we're holding our own even when it comes to performance against big tech giants. And what we're going to do is we're going to stay in our lane, focus on our strategy, and deliver and execute on that. Over time, we will show also in hard numbers that the tech investments that we have made will really help us get to that fully scalable business, not just through to EBITDA profitability, but also free cash flows and so forth. So that's what we're investing for, and we're staying focused on that goal. Of course, there will be competitors, and we have to navigate that, but we're also staying true to our strategy and our beliefs as to how to win in this space.
Yeah. Then we had a question from one that couldn't participate today, but he had a question about what is your most important acquisition challenge if we look in USA.
Acquisition challenge. There are some wonderful podcasters who work with wonderful agents, and we have some robust and healthy discussions with them. So it can take time to acquire and onboard. And I mean, we don't say acquire. We work with podcasters and we facilitate their relationship with their listener. It's not our listener, it's actually their listener. So I should adjust my language. We do not acquire podcasts. They're still free. They're still running their show. We're just helping them monetize and reach a big audience. But it takes some time on some of these bigger signings. But it's exciting and it's worth it as well. And it provides great excitement and buzz and brand value and exposure to us in the market. So it's worth it, of course.
Yeah. And he also had like a follow-up question. Could it be possible in the future to have some kind of referral model where the most successful podcasters can invite new podcasters in for free and have some kind of like a mentorship agreement to get a viral growth effect running?
Yeah, I love that question. I saw that. I think that was a really good question. Affiliate marketing, connecting existing creators and new creators is really effective. We also have, unsold inventory that we can work with. We can cross promote podcasters and help them grow their audience using the assets that we have. And that's also an effective way to sort of get the value out of the marketplace that we're building and keep building those flywheel effects so that we can continue to grow. But absolutely, I totally agree. I think that that's something that will be looked into. It's an effective way, absolutely.
Yeah. And I could also, when I listen to some podcasts that are part of Acast, I can hear that sometimes they mention they are part of Acast Creator Network, and sometimes they mention they're hosted by Acast. Is that something you're paying them to say, like in advertising, or is it a part of a contract, or why is not everyone saying it and some are? Can you explain that?
It's some of those are organic and some of those are part of our agreement as to the different things that we perform for each other in our agreement. But we also get lots of organic shout outs, and those are the most fun ones. We had some examples, I think, in was a Q3 or Q4 of podcasters just talking positively about us without us having prompted them at all. Those are the most fun ones. So we keep an eye out for those. But yeah, and sometimes that's an agreement that we have as they come on board.
Yeah. Okay. Perfect. And if we take a look at some of the financials, can you explain a little bit about the local profits before global costs? What does the global cost cover? Is that mainly administration and development, or what is the main cost pool in the global cost?
The main cost pool in global is everything related to product and tech. So if you look at that, and we split that out in the quarterly results, and all of that is global cost. And we have made heavy investments in product and tech, and that is related to the global costs. In addition to product and tech, that's the lion's share of global costs. And then, of course, we have a bit of finance and a bit of people and a bit of CEO's office and a bit of admin. But the big chunk is the product and tech teams.
Yeah. Okay. Do you expect that sometime the global cost will hit like a fixed amount, so it will become more of a fixed cost in the future, or will you continue to invest more and more in product and technology?
Yes, we've taken deliberate steps, and we've been quite forward-leaning in our investment in Q1 to calibrate and funnel more investment to product and tech, and we want to balance the business so that it has a solid product and tech leg to stand on. So, and we've guided that we will see slower pace of investment in the second half of the year. So we should see our EBITDA margin improve. But we haven't said that, we will ever get to a steady state where there will be no more investment needed. But clearly during these times when we're managing and feeling the sentiment a little bit from advertisers, we're just diligent in managing that investment and pacing as we go, because we know that we can scale this business in a fast way. We've done that before. We were all but break even in Q4 of 2020 actually. So we have that playbook of pacing our investment when markets are a little bit more turbulent. Yeah. But right now, we have some markets growing 107%. We have Europe; it's a little bit different. So we have to walk and chew gum. We can't just completely halt and miss out on some of those opportunities that we're grasping. So yeah, we have to walk and chew gum at the same time. But clearly, we'll get to a point where we will not need the same pace of investment as we have right now.
Yeah, perfect. Can you explain just shortly about the recoupable podcast prepayments that were a part of the, I think the cash flow? It dragged down the cash flow in Q1. Yes. How does that work? Is that something you pay in advance to podcasters, or what is it?
Yes, some of the larger podcasters who have an existing monetization model just need some comfort that they are going to have a paycheck when they move partners. So what happens in some instances is that there is a prepayment that is then recoupable as we start to monetize and split those revenues with the podcaster. So it's just a timing of cash flows, and then we have to make good on our monetization opportunity. But we need access to the inventory, of course, to be able to do that. So it's just a bit of an advance for them to feel comfortable that they're coming over and they have a paycheck during that transition period.
Okay. Yeah.
Right. I have a hard stop at 5, Anders.
Yeah, that's okay. We will stop there. I could continue for a long time, so let's.
I'll come back. This was wonderful. I love the questions. Really good questions, and also, of course, loved your analysis around comparing Acast and Audioboom. I thought that was wonderful to see. We scratch our heads as well.
I'm glad to hear that.
Yeah, don't worry. Brad and I, we have good banter as well. He's a wonderful CFO and he's doing good work. So yeah. We have a really good exchange as well. But thank you so much for the invite. And
yeah, thank you for you to spend an hour with us here. We will hope that you at some point will join us again when we have something else to discuss.
Wonderful. Would love to. Thank you so much.
Thank you. Bye.